Welcome to another CEO Wisdom Pod. We have Paul Wilke with us today. He's CEO at Upright Position Communications and co-founder of Walking Duck. So we're going to have a fun time today. We're going to talk about IPOs and PR and everything in between. This podcast is brought to you by podpire.com. If you want to start, scale, be invited to podcasts like this one, or even find sponsors, Podpire is my podcasting agency. Podcasts are pretty much the way to go this year and the next, whether it is for sales, growing your network, and even getting, your leads and clients up, because podcasts, they spread the word, they increase your authority, they even generate leads. So good for sales. Podpire.com if you need help with your podcast. Paul, welcome to the pod. Can you tell me a bit more about yourself and UPC?
Yeah, Charles, thanks for having me on. There are two companies that I run. One is Upright Position Communications. It's a PR firm. We've been around for about 12 years. We specialize in IPO PR and communications, but we also do a lot of B2B tech, media relations, and public relations. And then Walking Duck Productions is our video production arm, which we develop a lot of video content for our PR clients over at Upright, but also separately. It's a great way to get people out of what I call sort of content development paralysis, just some quick, easy videos to get people thinking about what your company does, what are the issues they face. And those two things combined sort of create its own little universe.
IPOs, you have lots of experience in them. When's the right time and how can I not fuck up my IPO?
Well, one of the things is, when it comes to IPOs, if a company's thinking about going public, it's really never too early to think about it from a communications or PR perspective. In an ideal world, we start working with companies a year to 18 months in advance. That never happens. I don't think I've ever had a client, a year, 18 months out say, hey, we're ready to go public. Let's start thinking about PR. We've had it as late as a week before the IPO. The companies fired their PR firm and brought us in to sort of do triage. But in an ideal world, you think about the messaging, you think about the story you want to tell over a longer term. Because what you're finding with reporters on the business side of things, they don't necessarily know your company, but they also don't necessarily know your business. So you need to define your company, you define the business on the company's terms, on the company's strength, because very often it's the first time they're hearing that story.
And what do typical mistakes in the IPO starting field look like? What do people do that they shouldn't do? Because we've seen these crappy IPOs. Was it because of PR? Yeah, I think it could be definitely, because IPOs are all about people. It's herd thinking, group thinking. It's people getting together and, oh, this is worth this. Oh, no, this is not worth that. Everyone's giving up on this company. I'm going to give it up too. So you need to have your PR right. It's a fundamental part. And we've seen companies go down. WeWork did not do well. Can certainly think of Peloton as well. That was a total failure in terms of IPO. So what mistakes did these companies commit? And on the other side, like, who have brought their A game to their IPO? Like, I can think of Alibaba, for example, and great IPOs. What have they done? Palantir, what have they done different?
I think there are really three things that I can highlight in terms of where companies often go awry. The first is making sure that legal, HR, communications, and the banking are all working lockstep together as early as possible. When they're all working together, an IPO tends to go more smoothly. What you find is one of the common mistakes is bringing the PR team or the marketing team in late in the game, and they're playing catch up. They're working with a narrative that they're not used to, or they didn't play a part in authoring. The second thing is, when you're getting closer to the IPO, here in the US, the two major stock exchanges, NASDAQ and New York Stock Exchange, have great marketing and PR resources that you can work with. And very often, when the bankers and the corporate level negotiate with the stock exchange, the marketing and PR side's an afterthought. There's stuff that is left on the table, or the opportunity to work with their PR and marketing teams that companies don't often know about. So make sure you realize the resources you have there. And the third thing is from a messaging standpoint. It's an old football saying. I think Vince Lombardi said it: "Act like you've been there before." When it comes to winning, and just act like you've been there before. If you're an executive or you're a team, you want to put your best foot forward. You want to be professional. You want to look like your CEO's got his or her head screwed on right. And that's really what you're telling the world. We're here and we deserve to be here. In terms of companies that have done well, like you said, Alibaba did it. It had a great IPO. Jack Ma, he delivered a masterclass in how to handle media. I often, when I show media training clips, I show the interview he did with CNBC because it's such a great interview in terms of how he positioned the company, how he talked about the things he couldn't talk about, or rather how he skirted around the things he couldn't talk about. And another company that did their IPO well, and this is from a marketing perspective, it's very easy to be gimmicky. Zynga famously had their mascots on the stock exchange floor, and when the IPO tanked, they're left, you saw the video footage of the mascots on the floor, and they were talking about the failed IPO. A company that did it very well was when Hilton went public. They gave the folks on the floor robes that had the Hilton logo on the back. And what was great about that is if the IPO started doing badly, they had a mandate to take the robes off, to sort of get them out of there. So you're not left with egg on your face or showcasing a brand at a time when you don't really want to showcase your brand.
These are funny stories. Airbnb's IPOs, I don't remember if it did well, but I remember it's being well orchestrated, and I remember the information that they provided to investor, the pamphlet, the flyers were well designed and everything. I really like that one. How much should the company pay you for your IPO PR services?
It really depends. What we do is, at Upright, we sort of work with companies going public in three different ways. One is as their agency for all PR services, corporate PR and IPO. That's probably the most expensive way we go, and that's in excess of $20,000, $30,000 a month throughout the IPO process. The second way is we actually work with other PR firms that don't have the IPO experience, and we'll work with them either in a white label capacity or recognizing they do the corporate PR, we manage the IPO side of things, lockstep in sync. And then the third way is just as an advisory level, where we don't necessarily do the content dev or the liaison, but we provide that counsel. There are three different pricing levels. One's higher than the other, but we really try to match the level of service with what they need, because each IPO is different. You're dealing with large companies and you're dealing with small companies. We did an IPO once that went public the same day as Twitter, which sucked the air out of the room from a media perspective and a PR perspective. So one of the things that we did was, and thank goodness they had a CMO and a CEO who got the fact that they weren't the elephant in the room, and they said, well, let's lean into that. Let's talk about what happens when your company goes public the same day as a large company. And media embraced it as sort of an as an underdog. And so each IPO is different in terms of pricing and scope and what we try to do.
So let's say an average 25K.
Yeah, probably around there. Again, I would say 15K up. It could go as low as that, but as high as 30K. So yeah, that's a fair figure.
And it's a long run. It's a marathon of like 3 to 4 months, that I could say.
In an ideal world, like I said, in an ideal world, we're thinking about it a year out, and then we price it. There are different. IPO month is different from a year out when you're thinking about messaging. So we structure. We tend to structure the pricing accordingly. But yeah, the intense period is the 3 months leading up to the IPO, the month after, because you're navigating a lot of things. You're navigating the quiet period, you're navigating the S1 filing, and then you're navigating the post IPO quiet period where when there are things you just don't talk about until quarterly results.
Strategy vs implementation. Usually, is it 80% strat, 20% implementation, or the other way around?
I think 80-20 is probably, that you're if it's done well, you're spending more time on strategy. It makes that 20% that much easier down the road. The great thing about the IPO process is it's very linear. There are rules that you have to navigate, and if you're working with the right team, you can navigate those rules to your advantage. I like to say that the quiet period is not a silent period.
Interesting.
There are things you can talk about.
Yeah, because you want to show different colors, but at the same time, you need to stay in the zone. I'm pretty sure some of your clients are quite rebellious or want to break these rules. So how much client coaching do you need to do, and what do you do if you have this client that wants to optimize the share price on that very day, and is sometimes willing to break the rules? What do you tell them, and how do you coach them to make sure that they protect themselves?
It's funny, there's sort of two extremes here. One is, and you'd be surprised, companies during the IPO process tend to be more conservative than we want them to be from a PR perspective. They listen to the bankers, they listen to the lawyers, and they're very conservative. They don't want to sort of rock the boat. And I respect that, but you get to the point, and that's why working with legal early on is good, because you can figure out how each is approaching this and pivot and adjust accordingly. So it's very conservative. So very often we come in, we have to sort of go with precedent and say, okay, well, we can talk about this, or we can do this because it's been done before. And so that's the conservative aspect. The other thing, and I've had this happen on just about every IPO, the CEO will reach out to us and say, hey, for interview day, give me something funny, give me something clever to say. And that's when I counsel them. That's where I go back to what I said earlier, act like you've been there before. People don't want a funny, people don't want a clever IPO. Investors want to see a CEO that has his or her head screwed on correctly. They don't want a jokester. They don't want someone who's Johnny come lately and looking for glory. They want someone whose head's down, focused on the task at hand. And you have to remind them of that sometimes, because there are egos involved.
IPO days, like, interesting. Ringing the bell, does it still have like that much importance, or is it mostly symbolic and, like you said, a celebration date? Like, I don't know, me, I have a weird relationship with celebrating things. It's like I'm so heads down that I have a problem with like chilling and celebrating. So what's the importance of that day?
The answer is yes to both. It is important and it is ceremonial. But I think the value is twofold. One is it's a huge opportunity for employees and people invested in the company. Most people only experience one IPO in their lifetime, if at all. And it's a moment to stop and celebrate that you're working for, or you have worked towards this goal. It's worth celebrating. And when you have a moment like ringing the bell at the hallowed ground of the New York Stock Exchange or as NASDAQ, and you see your company's name, on the outside in Times Square at NASDAQ, that's a big moment, and it means a lot to employees. We've had IPO clients that have chosen to do like a virtual bell ringing. We had to do a lot of that during COVID, But one of the things that employees lament is not getting to go to New York. That's like the Willy Wonka golden ticket. If you're an employee for a company going public and you get to be a part of the bell ringing, that's special. When I worked in house at Visa, that was the golden ticket. Visa was a big company at the time. It was the largest IPO in U.S. and maybe world history at the time, and only 10, 12 people can fit up on that on that platform above the stock exchange. So you're jockeying for positions like parade in front of the Kremlin. It's fascinating.
What's the business of NASDAQ? Seems like they have a monopoly, and it seems like the perfect business ever. Their name is pretty much everywhere, and they seem to have very few competitors. So how can I reproduce a NASDAQ and make a boatload of money? What's their business model also?
I'm not that familiar about their business model because we do a lot of work around the IPOs for both NASDAQ and New York Stock Exchange. And one of the things that we talk about with our clients is, they're like, well, which exchange should we list with? And from a PR perspective, it doesn't. I have a preference because there's one team I like working with versus the other. I'm not going to tell you which one, but both bring something different to the game. NASDAQ is very well controlled. It's a great event. It's able to bring more employees in. But then on the New York Stock Exchange side, it's the New York Stock Exchange. It's been around since the 1700s. You've got the marble, you've got the columns, you've got the excitement of the trading floor while the bell's ringing. So they're really two entirely different experiences. I've done both. I like both. And it's at the end of the day, it's really what makes sense for the company from a business perspective. But from a PR perspective, they both bring their own thing to the table.
It's interesting. NASDAQ, I'm gonna study them a bit more because it seems that it's like an association, right? But it seems that it's publicly owned. But yeah, something seems not fishy, but to be dug out there. It's like the real estate associations in Quebec, like these people make boatloads of money, plus they control like the full market almost. And anyway, these are always interesting stuff to study on my end. I want to ask on an IPO level, like when's the right time to IPO in your opinion, and should most companies seek to do that? Because to me, it seems that yes, it's like pushing something towards normal investors, which are a bit less savvy than most, and minimizing your risk and having a payday, especially if you have your investors. So when's the right time typically?
I don't think there is a typical right time. Every company's got its own trajectory. You've seen over the last few years, you've seen companies that are, when Visa went public, they were 50 years old. And, when Facebook went public, they were maybe 10 years old, whatever it was. So there's no ideal path. And some companies stay privately held forever. And I think it just depends on how you're structured, what the business model is, what the market is. There are so many variables. I'm coming at it from a PR, branding, messaging, media perspective. So, my take is a little bit different. I love having an IPO to work with as a strategic milestone for a company, but it's not the right milestone for certain companies.
Where have we seen PR disasters in the IPO space? Like, what mistakes can a CEO do to really put its IPO in jeopardy?
Fortunately, it's a process that's on the rails enough that it's hard for one CEO to really screw it up. But there are things that you can do, and it goes back to what I said earlier. Act like you've been there before, be professional, tell your story the right way, make sure you're well prepared. One thing that I always worry about with CEOs on IPO day is very often they're coming off of a roadshow where they are hyping the company. They're talking numbers. They're going into great detail. It's a very amped up, adrenaline fueled, hyperbolic, ego driven process that week. And then all of a sudden you come off of the roadshow and you've got all these guardrails that you can't talk about certain things. You can't talk about numbers. You can't talk about potential. You can't speculate. So you're getting put in front of reporters like after or right before you're ringing the bell. There's adrenaline. There's like mixed messages. You almost, as a PR person, you have to be a counselor and sort of hype them down a little bit, sort of wind them back. Like, okay, you can't talk about this, you can't talk about that, but here's what you can talk about. So it takes a lot of restraint. So we work very hard to make sure we get that balance right, and we work with the personality of a CEO who's coming off that adrenaline high and has to deal with a sudden course correction like that.
Looking at like the worst IPOs out there, Snap came out and their stock is doing very poorly. Uber, is it, in your opinion, is it because they just didn't do their PR job right, or is it that the market reflects very accurately the value of that company?
I think it's the latter. I mean, I don't think a bad IPO from a PR perspective inflicts long-term damage. It's a moment in time, and it's a moment where you can shine, or it's a moment you can stumble. But you look at IPOs over the years. Facebook's a great example. Facebook had an IPO that I think everyone agrees that first week was not great. But 10, 12, 15 years on, they're fine. They're not going anywhere. It all comes down to the fundamentals of the business. If you've got a good company, you've got the right fundamentals, you're financially sound, you're going to be fine. It's the stuff below the surface. Is the company well run? Are the numbers right? Is the business model sustainable? That's where you stumble in the long term. An IPO from a PR perspective, it's icing on the cake.
Maybe Evan should have accepted Zuck's billions when it was time to sell Snap. That being said, yeah, it's tough to say, right? Because you put a founder, a lion like Evan in a cage and restrict him and tell him to work on these things and stop being creative. It's always hard for a founder to be acquired by another company. Paul, welcome, not welcome. Thank you to have shown up today and share that wisdom with us. Where can people find out more about you?
You can visit us at uprightcomms.com. That's our website. You can email me at paul@uprightcomms.com, and that's uprightcomms with 2 M's. Or you can email me at paul@walkingduck.com.